Good morning, Academy 55. David Kahn here on Wednesday, the 5th of March. Happy St. Piran's Day. Won't mean a lot to most of you, but St. Piran was the patron saint of Cornwall, and it's Cornwall's day today. So happy St. Piran's Day. Anyway, enough of that. Here on the looking at the EUR/USD on the 1 minute time frame using our indicators and the Academy 55 strategy. It's now 26 minutes past 9 in the morning here in the UK. And we are looking at on the 5 minute chart. And as we can see, we've had the dollar taking a really big hammering after all the news by President Trump, tariffs, etc., etc. The dollar did not like that at all. The market didn't like that at all. So that is why you're seeing the euro climb. Let's see what could happen or may happen during this short time we're together. So let's go on the daily time frame first. And as you can see, dramatically on the daily time frame, we can see a dramatic illustration the last 3 days of what's been going on. Buying power, buying power, buying power, and it ain't stopping yet. We have imbalance on this candle here on the daily, so I'm going to draw that up. Is that where price wants to tap into? Because don't forget that has to be sorted out just the same as any other time frame. So indeed, we have this massive imbalance here. So we're going to change the settings to a sell FVG, fair value gap. That's what FVG stands for. So we got that. And as you can see, we did have a little bit of imbalance there, and that's now been sorted out by that candle there. And looks like may carry on to at least get into this bounce here. Just want to check out something on the fibs. Going from the recent, well, I say recent, this was back in November, from the high to the low. Interesting. We are now at what we call a 71.2 area. I'll mark that up. Now, this is an area where we could see a bit of a break to the downside, just there. So I'll mark that up. That's all we're going to do with the fibs. Remove that. Then I'm going to come down to the 4 hourly now. And on the 4 hourly, we can then see we have a little bit of what we call well, no, sorry, I won't use that terminology because you don't need to know about it, but we got a little bit of orders here where it did try to sell off a bit and then carried on up. So we're going to certainly mark that area up as well. If I can get the right tool. Just this area here could be a turning point again. Let's have that box there. That's it. There we go. Just that area there where it carried on up and we had a bit of a sell-off and then it carried on up again. So here is indeed a lot of orders in this area here. We haven't even used our zones yet. So I'm going to have to rely on the daily to maybe give us some lines to go for because it's gone so high. So looking at areas here, oh look where we are now, it's turned around before. That is a significant area where we are right now. And because it's on the daily, it's a long way away. So there's actually no point in marking it up because we're not going to encounter it on this session. But I think I might just do that one there because we've had resistance there, support there, resistance there, resistance there. So that area is certainly, and yeah, that's all we need to do really. There's no point marking up the 4 hourly. This is all a long way away from the price where we are now. So let's go down to the 5 minute. And our zones. Oh, look, the zone is where I said it was going to turn around anyway by putting that bigger box on. So the question is, if we break this area here, let's go back to the daily again. Sorry. Because there's another important area on a fib that we should be looking out for. The next important area. And that is another high there. Looks like it's breaking it, doesn't it? Sorry, I apologize. And you put it on the lower low, to there, and that's the 71.8 area. The next area of interest on a fib is the 78.6. So we will mark that up as well. So that could be the area. It could bounce and break off that, or bounce and break off that, or indeed go into this fair value gap. So that's an important area to look out for as well. So that's the areas we were looking out for. Putting it back on the 5 minute. We have no sell zones. So therefore we are making our own support and resistance lines where price could turn around again. But it seems to have broken that area a little bit. But we'll see. So this is where we are. Put the indicators back on. I mean, I don't want to continue a buy because I just don't know how long it's going to carry on for. We missed our occasions down here, obviously. So I'll be looking for a bit of a sell-off. And indeed, we are bouncing along that 71.2 line on the fib that I drew up. If it does break that, it could be possibly heading up to this area here, the 78.6 on the fib. or possibly going down to these, filling out these imbalances as they go, if indeed they intend to go higher. So this is the scenario, keeping God, that's really scrunched up, haven't I? Assuming that turns green, 2 to 1 is there. And that's the sort of scenario we're looking at as price comes down. Because gives us it's got to give us a better indication of we do want to sell off a bit. Because just here, look, we had a sell off, but we wouldn't have got into that because the trend line saved us. I mean, it didn't go past the wave even really. So we got to wait for it to get past the wave and all that good stuff. If it does. And your job as traders is to determine the best probabilities for yourself. Because following this strategy, we have a low 10% to 12% a month overall target. That in itself means that we don't need to trade. We look for the best probabilities of trading, i.e., making sure we're out of this little bit of nonsense here, sideways movement, making sure we have as many confirmations as possible. Now, I made my own confirmations by drawing in that line there, but we have no sell zone. And if you don't know enough about fibs and all that, that's fine. It really is. We don't need to know that. That's why we rely on the buy and sell zones to give us the confirmation that we need to take that buy or sell when price goes into the zone on the 5 minute time frame. But with my experience, that's why I drew that line on there on the fibs, recognizing that was a 71.2 area on that high and low we drew up on the daily. The daily to the minute is very extreme, but that's what we had to do. Buying frenzy. All right. So going by that bit of news, we might not get down to these levels, and it might carry on up again, possibly up to this area here. But that's okay because, like I said, we only need one trade or two trades a day. I think this juncture here, I'll put my MT4 on. Now make sure you have your risk to reward in purple, your lot calc in purple, your all important 1%. We have lots of imbalances down here for price to aim to if they feel inclined to do that at this moment. But I'm going to be governed by the trend line here turning red. The sell keeps popping off and popping on again. Excuse me a minute. Right, sorry about that. Right, okay. Somebody at the door. Okay, so nice to see so many people on this morning because this is a strange time for me. Well, not strange, but a new time for me, 9:30. And I did that because we had lots of news earlier on. So nice to see Adrian, Anna, Chris, and Raj on. Great to see you here today. And of course, everybody else who's watching the recording. But we are at a junction where we might have a sell, but all indications say they are wanting to go higher, take advantage of the weak dollar. So with that being said, what we'll do is I will actually show you the dollar. We'll come off there. This is the US 100. We don't need that. So we will, hang on, DXY, that is the US dollar index. See, as you notice, the dollar is getting weaker and weaker. The euro is getting stronger and stronger. Yeah, so we'll keep that there just so we can keep an eye on it. This is the EUR USD. This part of the trading view is the dollar, and as you can see, the dollar's getting weaker and weaker. And just like the EUR USD, I've got the zones on it on the 5 minute time frame. So when they get into the zones, it's the complete reverse. So when that's a sell, that's a buy. And so it's a mirror image. But I really wanted to take advantage and just look at. So really, I'll take these indicators off and I'll go on to the daily of the dollar. And as you can see, just like the euro, we saw on the daily time frame, we saw green, green, green. Here on the US dollar, we're seeing red, 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 more or less a mirror, an image of it. So it's gone, the lowest is gone since certainly November. Let's I'm keeping one. I'm only using this part here because I am keeping an eye on there because that's important where we are now with the euro, so I don't miss anything. The volume has just started to turn red on the euro, euro USD, so we'll keep an eye on that. But I wanted to show you this and see the dollar might be wanting to come down with this area here. So we're on the, let's go to the weekly with the dollar. Bit extreme. But as you can see, the dollar was climbing. President Trump's inauguration. And now hang on, sorry, we've got to go back. Sorry, I've got to go back because we are at a stage where the euro's selling off a bit. We got that sell signal. We're at that time when see we got nice bit of imbalance down here, and indeed down here on this candle here. So will they be coming down to equalize that before they do anything else? I hope so. So I'm going to lock my stop loss in there, but I want a little bit See, we've got a bit of a sell-off there. So I want to get below that area there. And give myself a bit more of a confirmation that we are going for a deep sell. Now, having said that, look what's happened. I'm glad I didn't rush in. We had a bit of a sell-off there, look, and the buyers came in again. So I want to make sure I get below this area here, and then a bit more of a confirmation of a sell, if indeed we get there. By that time, the trend line would have turned red. Everything's good. So lock my stop loss in there. We're nearly, because like I say, history repeats itself. We might see the same thing here where we shoot back up again. So I want to give myself as much confirmation as possible that we are indeed maybe heading on down for a deeper sell. And I'm prepared to wait about that. And it may or may not happen. And at the end of the day, if I do get taken out, it's only 1% because we are going to be on a bit of a retrace. But what goes up must come down. It's just a matter of when, timing. So we're dancing around. Are we picking up more buy orders to shoot on back up again? Or are we going to break through these orders here and carry on down to these imbalances down here? I hope so, but we will see. So I want to wait for it to get below that area there. To give me as much confirmation as I need. Trend line's red now. Just a, nearly hit the, I nearly hit the sell button there. Just want to get a little bit deeper. Maybe give it 4 pips. Indeed, it does do that. Not wishing to jump in too much. Ah, right. I'm sort of glad I didn't jump in now. Got to see that there is level with that there. I've got to wait for it to break that if it is going to. Give me a little bit more confirmation. All right. I can get in now until that parallel size swallowed up. If it does happen like that. So as you can tell, I'm really glad I didn't get into it. Obviously, I would have been taken out by now. So let's leave it uploading. And indeed, like I said, history did sort of repeat itself. We got down to these levels and then decided to carry on up again. Have a look on the 5 minute. Because according to the 5 minute, we are still in track for a deep buy, but that could change as soon as that parallel SR is swallowed up. Well, anyway, so what happened? Nearly had a sell, but still might happen, by the way. But we got a little bit of imbalance here. So if they do intend to take it back down again, maybe they want to do this little bit of imbalance here first and then come back down again, or indeed carry on up to the higher above there. If they get above there, then they're getting to that next notch on the Fibonacci, probably. But as I said earlier on, waiting for the best probabilities and recognizing sideways movement and recognizing the fact you only need one or two trades a day. Don't go in with the attitude that I really need to trade because I've got to go out down the shops later on or go to work or do this or do that. So I really need to place a trade because of that. Don't have that attitude because the markets don't care about that. Have the attitude I'm finding the best probabilities for me because I only need one, two trades a day. Right, you see there's a buy flickering off now. So could it be getting down up to that level again and bouncing or breaking? I just don't know. Just don't know. So if I was to take a buy, I'd be waiting for price to get above that line there. In actual fact, let's do that. Oh, sorry. No, it would be on the trend line, wouldn't it? The stop loss would be on the trend line. But I'll be waiting for price to get above that area there where it respected and bounced off that. So if we was to take a buy, which is the next, which is flickering on and off, I will have to give myself quite a big stop loss, I think, because that's where the stop loss will be because the trend lines are starting to turn green. But I am waiting for confirmations and I want to see price get above there before I get into the trade. And we'll be at 5 odd pips. More than that, I think. Maybe 6 pips, 7 pips stop loss. But I need that confirmation because otherwise I'm thinking to myself, it's either going to bounce and come back down again. But if it breaks it, then in my mind, I've got a chance that it's going to carry on up. So I'll just leave this floating for a while. As we saw earlier on, there is a lot more scope for the dollar to fall a lot more and the euro to gain more strength. All right, let's try again. So that's where I want my stop loss, just underneath the trend line, which is now turned green. Everything else is green. But for my own confirmation, I want price to get above there because I'm fearing the bouncing off that and coming back down again. Sorry about that. I don't know what happened there. And indeed, it might be a continuation of, you know what, we've got as high as we can today in the London session. We will carry on doing this sideways thing until New York opens, and then let them over there decide what they want to do with the dollar. That could be a consideration. So obviously, in that case, we don't want to be trading in that sort of sideways movement because it's just too risky. So therefore, the probabilities of a trade is not good. So you recognize that and prepare to come back either later on today or go on to the US 100 later on this afternoon or this evening, or indeed come back tomorrow. The important thing is you've got to get over your fear of missing out, keep your discipline, and more importantly, you've saved your money. But recognizing all those things will make you a lot stronger and better trader in the long run. There we go. See, it's going sideways now. Maybe at 10 o'clock, another minute's time, we might have a bigger candle, more of a decision. Time-based thing, you never know. I hope everybody on here and everybody else watching is resisting the urge. Oh, I need to trade. I need to trade. I have to have a trade. Please, no, don't be like that. I'm very hopeful that the majority of you don't think like that. But I guess secretly, one or two of you probably do. You're saving money. You're not giving it to the banks. You're waiting for the best probabilities of trading. Hopefully, on with me, you are recognizing things to look out for, i.e., sideways movement, support and resistance lines, and how they can bounce or break off those lines. And that combined with the power of this Academy 55 indicators showing you where to put your stop loss, whether to buy or sell, with the green, green, green for the buy, the red, red, red for the sell. will stand you in really good stead going forward. So let's have a look at trading view for that. Right, so we'll get rid of that one then because that's no longer applicable. We didn't get in that, which is good. So this is the scenario that I want to see for my own personal confirmation. I want to see stop loss there, where the green trend is at the moment. Price above there, somewhere like there. That's a 7.7 pip stop loss. But you know, that's what I need for my confirmation that I'm indeed going to be, the price is going to get higher. And now, as you can see, it's coming back down again. Right. So we need a sell alert. And just like before, with the sell, I want to see price get below these levels here to give me a better confirmation of a bit of a sell-off. And of course, I need that sell alert. But all the while, we are going sideways. But if price gets down here, we've hopefully broke that sideways cycle. Coming down to mitigate these imbalances down here on these candles. So that's where I want my stop loss, just on the wave. The trend line's just started to go red. I want to, obviously, I need to see another sell alert, which will probably happen if indeed price does get below this level here. So be ready to push the button at, oh, there we go. We're not below there yet. A little bit more. Come on, just a bit more commitment. Might be prepared to go to 6 pips. Show me a bit more commitment for a deeper sell. I'm not going to be pulled into this bit just yet. One more little push down though, and I'm in the sell. I'm not convinced just yet because we are level with the lowest lows here there. I'm being patient. I want to make sure we break free of that sideways movement as much as I can, be sure anyway. Because indeed we are going up again. It's a shame. Yeah, there we go. I'm glad I didn't get in, really. Not yet, anyway. Still might have the sell on, but we'll see. Patience is a virtue. So I'll be off celebrating St. Piran's Day, patron saint of Cornwall, where I live, and having myself a Cornish pasty, a scone or scone, depending on what part of the world you come from, with jam and cream that way around, not the other way around, because you'll be in Devon and they don't know how to do it properly in Devon, and a saffron bun. All things Cornish today. Right, I'm going to be in now, I think. In respect of the fact, and we are still in a bit of a sideways movement, but I've seen it as much confirmation as I dare because I don't want a bigger stop loss to entry. And indeed, we are going the right way at least, but it's because we're having a retrace trade and it's mainly been a buy. Hopefully, there's enough imbalances down here that they want to check out, but also recognizing the fact that if I were to lose, I lose just the 1%. I had a good go, no problem. But I've given myself as many confirmations as I feel I need. So we'll get rid of that. And indeed, we are on. Sorry, I scrunched this up and I've made it way too small. That's better. So indeed, I got in. That's about all right, isn't it? No, it's not 7.5. What was my 5.5? 5.5 pips. And this is that's there. That's more like it. Yeah, that's grand. So my 2-to-1 is there. So we got imbalances here. Hopefully they'll sort that out. And we've got imbalances here. But we've also got a key area here. This area here is a key zone. Anything with 3 zeros on it, psychological level. And I'm thinking we might have a bounce or break if price gets down to these levels here, which is more than 1%. So I'm thinking to myself to save my equity, if price does get down to this level down here, I'm be prepared to put my stop loss to my entry to have a risk-free trade for the rest of it, fearing a bounce or break. Because there's no doubt about it, the dollar is getting weaker and the euro wants to take advantage. So we are on a retrace to a big degree. But there's two ways of looking at it. So I'll draw that up on the MT4 as well to remind me. And indeed, that is the key zone area. Let's have a look and see what it's like on the 5-minute. Oh, that's quite nice to see. We've got imbalances down here on the 5 minute time frame. And indeed, we touched the key zone area now. So I make a decision now. Do I put my stop loss to my entry? It's indeed broke that now, so I'm not going to do that. And I indeed only want, in reality, another 3 pips to the downside would do me. But unfortunately, it's causing all this imbalance here. It depends how quickly they want to get on with things and how many orders they've got and all that. Indeed, let's have a look at this 5 minute again. On the 5 minute time frame, the parallel stars are quite above price, so that tells me there's a little bit of a deeper level of selling, sell volume going on. But we ain't out of the woods yet, obviously, because the trend line on the 5 minute is still up there. But I keep reminding myself at this juncture, I'll be walking away, making a cup of tea, because there's no point. There's no point going through mental anguish, for want of a better word, by watching all this, because you've made your choice, you've got your confirmation. If it doesn't work, you lose 1%. If it works, you win 2%. And just be happy with that and recognize that. But now the Parabol SAR has come down with entry. So do you know what? I'm quite happy to put my entry to my stop loss. And that's as far as I'm going to go with that. Because we're at the key zone area where I know sometimes they take trades out, put trades in. The parabolic SAR, we're following the parabolic SAR down. It's coming to my entry point now. So I am protecting my equity. I'm not going to follow it down. I'm quite happy to leave it like it is. I've got a risk-free trade now. And I know I'm on a bit of a retracement trade. So things are a little bit more risky than trading with the trend. And we did have a bit of a trend earlier on. Go back to TradingView for this. Obviously, there's been a buy trend because the dollar's getting weaker and weaker and weaker. But it's all about timing. Well, hopefully, they'll want to come down and do that. But if I get taken out, right. If I get taken out, I'm happy with that because it was a retracement. Does price get up to here, to this trend line here, and then turn around again, or does it carry on up? Because the bigger picture is they do want to strengthen the euro against the dollar, which means my stop loss, which was there, would have been broken anyway. And it's a risky old time. Riskier old time. Well, no, it's not just, sorry, I'll retract that. It's It's not as risky as any other time, to be fair. But I am, I recognise I'm in a bit of a retracement trade because the bigger picture is they want to sell. Sorry, they want to buy the euro against the dollar. So I'm happy with that. I'm very happy with that decision there. I'll be ha even happier if it breaks the key zone area and comes down to my 2%. Don't get me wrong. But if it comes down and takes me out for no money at all, I'm happy with that as well. Because there's always other times and you haven't lost any money. So at this juncture here, I'm going to be putting the chat for all the members of Academy 55 and everybody else who's watching. If you have any questions, write them in the chat and I'll answer them for you. But we come down to visit our key zone area again. Now, are we forming a bit of sideways movement along this area here? Who knows? I'm quite happy with the situation, what I've done, even though I do respect the fact that a little bit of volume could take me out. By doing that, there we go. I think this might be. It'll be unfortunate, but guess what? I haven't lost any money, and I'm happy with that. That's the key objective: is not to lose money. Why do you sometimes follow down the SARS, but this time you didn't? Well, because I followed down the SARS sometimes and it did what it did. So if I followed down the SARS this time, for example, I would have been taken out there and, and indeed I've been taken out altogether now, but I've been taken out there and then price comes back down again and I would have got my 2%. But what I'm trying to do for you guys is recognize the number one rule is to protect your equity. And if you do get a break-even trade, it's all about your own personal beliefs, your own personal view of money and all that sort of thing. And yeah, some days I'm like everybody else. I have a different mindset, but I've it's a constant struggle with me what to teach you guys. I know what I see, whatever I do is personal to me and it doesn't affect anybody. But now I'm in a situation, personally, I'm in a situation where I am trying to teach you guys what I think is the correct way. And it's a conflict. It's a conflict with me. Sometimes I think the correct way is to follow the SARS down and get a little bit of money. But ultimately, the correct thing to do is to make sure you don't lose money. And that's got to become above more than following the SARS down. So the correct way to do it is like I just did it, I think. But other people have a different opinion. I mean, some people would just keep the stop loss up there as it was. Stop loss being, I'll move that a minute. Keep the stop loss up there and just let it all play out. And in fact, I recognize that might actually work. But at the same time, it's also true to say to make sure you don't lose any money, which is what we did. Other, it's people have different opinions, and that's my opinion. There's no right or wrong answer, and that's the conflict I have. But I think overall, teaching you guys to protect your equity is a lot more important than going that way. Sorry, Chris, that's a bit of a long-winded. See now, look, look, there we go. Look, see, look, but that's okay. It's fine. Let's go back to trading with this. Look at that. See, it just took me out with that there, and that could have been a yeah, that could have been a 2% trade. But I didn't lose money. And that's the more important thing. I didn't lose money. And if you get into that mindset in the long run, that'll save you, yeah, getting the 2% will give you a bit of a buzz, bit of a high. But if you're in this game for a long time, saving your money is the way to go. And I saved my money. And what I should do now is walk away, which I will do, and recognizing the charge for what it is. And then I can come back maybe later on today and wait for price to get into the zones properly. Because don't forget, the price never went into the zone. Funnily enough, we got a zone now, but we didn't have when it was there. The zone one, two, three, four, five. The zone only appears after about 5 or 6 of these candles. So at the time of taking the sell, we wouldn't have actually known we were in the zone. And there we go. Well, I done the wrong thing with the commissions and everything. Well, did I do the wrong thing though? Yeah, that's an interesting question. Please please put in chat whether you think I did the wrong thing or what do you think I should have done? See, this little spike here with commissions took me out as you saw. And indeed, we did go and get our 2%. But I didn't lose money. And that is the overall riding thing. That's the most important thing. I didn't lose money. So I broke even. And now I live to fight another day. I can wait for better confirmations when price goes into an existing zone. So it'll be very interesting. Anna says, no, you did what you saw with the confirmation you had at the time. Chris thinks I did the right thing. Hannah says hindsight is wonderful, but not a fair picture. See, everybody's got a different opinion, and I'm trying to um, give you guys an opinion of somebody who's been trading a long time, somebody who's been making a consistent profit of trading for a long time, against somebody who is really after a win. A win's a win. Well, like I said, that's interesting you said that. Anna said you've been right more than you've been wrong. Interesting you say that, Anna, because there is no right or wrong answer in that particular question. Should I have put my stop loss to my entry? My the view I believe you should have as a trader is to protect your equity as much as you can. So when you see the opportunities for what you're thinking is going on, to put your stop loss to your entry, it's perfect. You should do so. And incidentally, a stop loss is an order. A stop loss is an order, right? So I know they have algorithms. I'm not saying they singled out my stop loss. A lot of people might be doing the same as me and putting their stop loss to their entry, but the stop loss is an order. So they come down to get that order and then carried on back down again. And in this instance, if I'd have just kept things they were, I went to go and make a cup of tea or a cup of coffee, I wouldn't have known anything about that, and I would have been successful. And I've been in trades where indeed prices come down. Let's get the pointy thing in. I've been in trades where prices come down there and then come back down and took me out. Adrian's looking at the bigger picture. Well done, Adrian. Saying I did the right thing under the dollar's weak situation. Yeah, because I recognize that this was a retracement trade because the dollar's getting weaker and weaker, but they've had a minor, the dollar's found a little bit of strength. That's why you're seeing the euro go down a bit. But the bigger picture is for the dollar to get weaker and weaker, so the euro will be wanting to climb more and more. So I recognize that this was a retracement trade. So therefore, I was in a bit more of a tricky situation, not tricky, sorry, got to choose my words, not a tricky situation, but a retracement situation. So therefore, by me protecting my equity and not losing any money, I was happy with that. But at the same time, I put my stop loss down to my entry, which is then still an order. And indeed, they came down and took that order and down they went. Well, like I say, if you, Anna says it makes complete sense, of course, but it also makes complete sense to keep your stop loss there and go away, make a cup of tea, and accept a 1% loss. That makes that makes sense as well. Because don't forget we have a 70 to 75% win rate by doing just that. Yeah, Adrian, that's fine. Uh, but I don't look at it like that. If we hadn't been here, you would have had had a coffee and 2 grand. True, but I also know I don't look at the smaller picture. I look at the bigger picture. I also know that I've only got a 10%, 12% target for the month. And as long as I keep pushing towards that, that's what I'm looking at. I don't look at one trade individually like that. And I distinguish the money side of it and turn it all into percentages. And if you do that, it's a lot easier to do these things I've been talking about rather than look at it from a money point of view. But you are correct, Adrian. Right, having said that, I've gone overtime now. So I'd like to thank you all very much for coming on today, and I hope you learned a little bit. I'm off to have a pasty for St. Piran's Day, patron saint of Cornwall, and maybe have a saffron bun as well. Although I shouldn't be eating those things because I'm a diabetic. But don't tell the nurse. Anyway, so see you guys tomorrow, and speak to you soon. Bye for now.